Hi guys, thanks for tuning in to another episode of Nuggets News. We're back here in Brisbane. We thought we'd better visit Paul at Ainslie. So it's pretty busy at the moment again in the gold and silver market. So how's it been?
Yeah, very busy, mate. It's been incredibly challenging to keep up with it all, but exciting as well. There's a lot of new people coming into the space as well.
Yeah.
So, but the regulars are coming back with smiles on their faces as well. So
I want to dive into why that is and what we've noticed going on behind the scenes in the gold and silver market and maybe in the macro market. So first of all, we're sort of hearing that there has been a new wave, and all of a sudden after that lull, a lot of places are now running out of some types of silver, for example.
Yeah, but we're certainly seeing we're okay, but it's tight. But we're certainly seeing refiners, other bullion dealers putting up, order now, delivery later sort of stuff, because silver in particular, it's a small market, and it's certainly tightening up. Gold's keeping up at this stage, but we're seeing some increases in prices as well. So, yeah.
And what's that like? A lot of people, they get the FOMO and they want their hands on the real thing when they want it, or are some people happy to wait a month, 2 months for delivery, or how's that all work?
Most people are understanding of it. I guess the old timers get it, they saw what happened in 2015 as well, and so they want to secure the price more than anything, but then it comes down to a trust thing, so you want to be doing that with a bullion dealer is going to deliver, and then they're happy to wait whatever it might be, but at the moment we're good for delivery with just about everything. So.
And what's different between 2015, for those that weren't following gold and silver back then, it bottomed at around $1,050 and had a pretty big run, and everything took off. So the metals themselves, the miners, and I think a lot of that smart money I've heard is being a little bit more cautious before investing in the gold miners, for example. And we're sort of seeing the first stages of a bull market, but we're definitely not into the fully fledged run yet, are we?
Yeah, 2015 was weird. It was the first time the stock market had that. I think it was 20% correction on that first yuan devaluation, and so it was the first shock to the equities market. Given futures or whatever metals didn't really take off that time, but demand did. So we saw that disconnect between the paper price and the physical price as well. Because it was, we're talking about tight now, it was insane then. Like, we were cleaned out. There was huge weights for silver. All the refiners were putting up their premiums. And so the price was going up. We were literally paying people spot to get the metal in, just to try and satiate that demand. So that was different to now. Now's a strong surge, but we're seeing the price respond as well. Because I think, whilst that was a shock, this is more fundamental. I think people are just seeing this does not make sense. Negative yielding debt, all this sort of thing. So I think, and as you mentioned, we're seeing some money, and call it larger money, that have got cash in the bank, that are getting really concerned about that cash in the bank. So we're seeing those guys come in that aren't particularly even thinking about capital gains per se. They just think about protection of wealth. So we're seeing that flow of money into bullion and crypto. We've had plenty of that as well. Just getting it out of cash.
Yeah, it's interesting that stock market declined back in 2015, whereas this time round stocks are still near all-time highs. Well, even in Australia, they look like they're going to break out to new all-time highs, but people are saying, well, this isn't normal, or not everything is good in the world, and it's that rotation. And something I hadn't thought about a lot before. If I'm a very wealthy investor, for me, I'm not rotating into gold and silver necessarily to make money. It's because I don't want to have my money barred in from a bank, or I don't want to lose 40% in the stock market. So they're more happy to park their money in there. And if gold goes up, that's great. But if gold even goes down 10%, if everything else goes down 50%, it's just rotating your money into something that you know is pretty safe.
And I think more people are sort of doing the math that if you lose 50%, you've got to make 100% of what's left just to get back to even. So they're starting to see, well, a share market at this heights with what's going on in the background could easily do that, and has done it many times before. So they're starting to say, well, really that's just too big a hit, and I want to seek safety.
And something else we spoke about at dinner last night was the baby boomer generation maybe selling up some of their property, but also upsizing, sort of maybe selling if they've got a couple of homes and just buying one home, and people are sort of getting their house in order, pardon the pun, just all their assets, moving some into gold, getting back to that family home for maybe taxable reasons on future appreciations. So it's interesting to watch how that generation that's accumulated a lot of wealth is thinking, because they've got retirement on their mind. Do they own a lot of stocks they've done pretty well? Okay, let's rotate out of that a little bit. Are you seeing all that?
Yeah, it's a real... It's a self-preservation thing, so it's a hard asset. So they're seeing the growing nonsense that is the financial assets that are being, artificially stimulated and inflated and that sort of thing. So I think, anything that they can see that has intrinsic value, and there's probably two ends of the property market at this stage. I think the higher end is probably keeping its ground, but we're seeing real stress in that fringe area at the moment, and certainly some of the stuff we're hearing is a little bit scary in that respect. So I think that bigger money again is trying to consolidate into hard assets.
Yeah, and it sucks to say, but it's almost the haves and the have-nots, and those people that are protecting their wealth, and while other people are struggling to get wage increases. And the great divide, I guess, it's going to be even more so maybe after we have this correction or reallocation of assets or more QE. I think it all does lead to that inequality.
Yeah, well, something's got to give. You can't print the amount of money that they've done and channel it into financial assets predominantly, which leaves away, so it's into Wall Street, not Main Street. And, we've seen Trump, we've seen Brexit, we've seen plenty of symptoms of that discontent, that social discontent, and it's only going to grow because this is, that we're seeing right now, ECB last week. So the response is more stimulus. Well, this is not going to fail on my watch. So we'll just keep printing and we'll keep extending this out, and that's just going to make it a bigger bust.
And it's likely going to come to Australia and the US too. We're not special. Once everyone starts doing it, we're going to go down the same path. So it was funny, we were in the waiting room before we were going to record, and someone came in to buy some gold and silver, I assume, but they mentioned that they've also had a dabble on CoinSpot on the Ainslie gold and silver tokens. So is that picking up and spreading around?
Yeah. It's been good. It's strange because we're used to people coming in here and dealing directly, whereas that's sort of this other beast. And no, it's going really, really well. It's getting a lot of adoption, and then we've had Bamboo pick it up as well, and so that's been great. But yeah, it's getting out there. Yeah.
So for those of you with an iPhone, you can download the Bamboo app, and you can buy a little bit of your cryptos or gold and silvers each week. Build a little basket there, which is a really cool little app, and hopefully that's out on Android in the coming months as well. But yeah, it's cool to see all these little businesses that we've recommended and worked with coming together now, and a lot of people starting to say, let's dollar cost average into gold and silver.
It's amazing how often we get asked about that sort of savings plan, that just micro investing or to whatever scale you want. But when you can just tap on Bamboo and do that, it's a lovely little way to very easily just accumulate your gold or your silver.
Cool. Little plug there. Anything else we haven't spoken about today, Paul, you think's important for people at home with what's going on at the moment?
No, I think it's interesting, the wax and the wane of the crypto at the moment. So it's certainly quieter on the crypto, but we're getting, we've had a few people in today that are starting to see this channeling and they're betting of the breakup, and we both know it can go either way. But there's a growing sentiment, I think, that Bitcoin could start to break out, and then the big question's the altcoins as well. But I'm sure
everyone sort of thinks that Bitcoin's dead at the moment, and it's up 300% or whatever this year, and gold and silver have gone up 20 or 30%. Everyone is excited as an altcoin bull market, but diversification across all those different assets, I think, is the way to go. So thanks for having us, Paul, and we'll have to talk again soon.
Good on you. Cheers.